Trading gold. I guess for a lot of people looking to trade gold, it does represent a bit of a challenge. This is part of the Commodity Broking Services 9-minute educational grabs, where we look at some of the training and also some of the trading methods that I've certainly used over the last 25 years of trading the metal. And we also talk about some of the markets that we actually look to get involved in. But I guess the important things are when you are looking to get exposure to gold, what are the markets are you really looking at? And I think there obviously is via shares, miners. You can get involved by the ETF markets. Certainly the SPDR is one of the largest gold trusts now. You can buy the physical market, the CFD, the futures, and also the spot deferred. So depending on your appetite for risk, really also depends on what you're actually looking to, or how you're looking to trade, and also how you're looking to profit. Obviously, if you traded a CFD, the spot deferred, or a futures contract, your profits would be a lot larger, but also your losses would be a lot larger than if you, say, traded a gold trust, something like the big ETFs, exchange-traded funds, the SPDR being one of them. Then your gains would not be as much, but they'd certainly be a lot safer. As with stocks, well, you've really got to understand what's happening behind the scenes for the equity, and once you understand what's behind that, then you'll probably get that form of return there. What we're going to focus on is what I like to think of the free markets. There'll be the leverage markets, the spot deferred markets. Why do I like it? It's just a bit more of a challenge. It's what the interbank markets trade, and it's got its own characteristics. I certainly like it also because at trading the spot, we can trade off the option side of it as well, and we can sell options as well as buy them and trade the spot around them. So we're going to focus on the spot market. Essentially, when you are trading the spot, there's a couple of things you've got to consider, and that's the spread in the market, the buy-sell spread. It is a little bit larger than the futures markets, and the main reason for that is purely the way the interbank works, because the volumes are a lot higher. I'll give you an example of that. If you trade in the futures markets, the minimum contract is 100, or one contract, which is 100 ounces. In the interbank market, the minimum contract is something upwards of 5,000 ounces, so it's quite considerable, the size. So the spread is there to help things along there for the person getting in and out. However, what CBS offers is the ability to trade that interbank market at reasonable spreads, and the spreads there range from about 50 through to 60 cents. Sometimes even quite in the busier times, it actually can come in a little bit more than that. Why do we like it? We like it because we're obviously trading against options on that, and to me it's the purest form, because when something happens out there in the market, you find that in the gold market, it'll happen in the spot a lot quicker, and certainly the rumours come around on the spot market a lot quicker than they do on the futures markets, and that's one of the other reasons why we actually do like it over the others. Either that or it's just tradition. We like trading it. That's the way we like it. So the spot market, the futures markets, pretty similar in terms of the leverage, and obviously you can trade the CFD now, which is a new one. Not too bad, the CFD, if you are slowly starting to get involved. The minute contract sizes can go anywhere down about 10 ounces. So you've got the CFDs, which I would say if you're trading small, then you can trade the spot or the futures markets. The spot market you can trade smaller than the futures markets. Futures markets, as I mentioned, was 100 ounces. The spot market, although it has a little bit of a wider spread, you can actually trade down to 50 ounces as well. So, but it's really our personal preference on what you want to trade. The things to consider when trading gold is that if you are short gold, you will receive a small income. If you're long gold, you will pay an interest and an interest cost for that. And that's just in the market. That's determined by the lease rates and also the US interest rates. If you want the calculation for that, I can give you, but these days it's pretty small, and it should really not make much any difference in terms of how you should take on a trade. Obviously, there are two sides to trading, and I guess the key one there is the fundamental side and the technical side for trading gold. You've really got to combine both of them, and that's certainly what we do in looking at trading. Combining both, in my mind, gives you the better outcome. At the moment for gold, we've seen IMF sales. We're seeing some political tensions in Greece over what's happening there with their sovereign debt. And, of course, the big play there is what the US dollar is doing. So whatever the US dollar, gold tends to do the opposite. But it is quite interesting. And what we'll do now is we'll look at a few charts. The charts we look at, we trade on the Falcon Trader. And the Falcon Trader is a great piece of software. It basically gives you everything that you need in terms of your trading. And it sort of covers all the markets, all the gold markets as well. And it is quite an easy thing to look to operate. And when you look at it, and I'll just pull up a few here. This is a trade window, and that's quite easy. I've moved gold in there, and then as you can see there, that'll populate. And then you can see you just buy and sell from there, so that's nice and easy. You can look at the CFD, and the CFD for gold also just comes up as well, and there's lots of gold things there. There's the SPDR trust, which we've also talked about, and the gold CFD. Where are you, gold? There we are, gold CFD there, and that's the gold price, which, as you can see, pretty much mirrors the spot price. And of course, you've got the futures markets, and the contract there is GC. And you can buy and sell that. So using the Falcon, you can certainly trade lots of them. Different styles. It really is up to your own personal preference as to what you want. Okay, what are we actually looking at the moment for gold? I think is something which is quite interesting. And with that, with the Falcon as well, we can actually get a chart. And we'll just get that. And we'll throw this into here, which is nice and easy and very quick. And you can see here, there's the gold chart there. And all right, that's the hourly gold chart. But when we're doing this sort of trading, we start with the day, and we work our way through to the hourly. Now, as you can see, we've been following this trend quite nicely. The trend has broken. Now, remember, we're talking about this downward trend has broken from that old record high. So it's broken, and now we're resting back on it. The expectations, this is a breach. We're seeing a pullback at the moment. That pullback, as long as it stays above this trend line, suggests that this bull move that we're seeing is intact. So now we're really looking at opportunities to the downside to actually buy it. So if we look at that now, and there we go there, just crunch it up a little bit, and that's the hourly chart for gold. And last night's movement was quite interesting. So at the moment, we can actually look to buy gold at these levels, and the stop goes below that 1090, 1088. So if you're looking to gold at the moment, it's perhaps not a bad buy opportunity at these levels, looking for it to trade onwards and upwards. Stops on this particular trade you can put in at 1088, no problems. So that's something to look at. Also, our stochastics are on the downside here. That also gives us a bit of a view that things don't look too bad for that particular trade. But the other way of looking at it is you can trade a break to this high here. So you can buy on a break back through 1105, and if that happens, then that's just as good a trade as well. So that's good. So that's a little bit on gold. As I mentioned, you can trade it on the Falcon, and there's certainly lots of different ways to actually trade gold. But the Falcon Trader does have them all there, and it's a fun thing to get involved in. It's a great market, and if you need any questions, feel free to give us a call, 1300 660 734. That's 1300 660 734. And yeah, good luck and happy trading.